please subscribe and don't forget to press the bell icon to get notified whenever we upload a new video.
Friction between the United States and China escalated today, with both countries taking another step closer to what seems like a full-blown trade war. Now, this morning, China announced plans to impose 25% additional tariffs on over 100 American goods. The list includes soybeans, cars, aircraft, whiskey, beef, and cigars, among others. The tariffs are expected to hit American farmers hard, most of whom belong to the Republican-supporting agriculture belt in the country. The retaliation by China follows the United States' decision to impose additional tariffs on over 1,300 Chinese products. Now, according to the Office of the U.S. Trade Representative, the latest measures are intended to target products that have benefited from China's theft of U.S. intellectual property. CNBC's Eunice Yoon has been speaking with top Chinese government officials. She brings us the details. So, Eunice, what is the view there in Beijing?
Earlier today, I was speaking with the vice finance minister, who told me that China doesn't want to see a trade war, but that it also will not step down. This is what he had to say.
China never yield to the outside pressure, and we hope, based on mutual respect, we can constructively find a way to solve the problem, and we can look forward to build up. That's great country relations and jointly make contribution to the global economic development and peace. That's fundamental important for China, for US, and for the world.
And this is a $50 billion package, so it's tariffs on all of these types of goods, 106 items, 25% tariff, and some of the goods are things that we've talked about in the past: beef, autos, aircrafts, as well as soybeans. I asked him about soybeans in particular just because China needs American soybeans and buys so much of it. And he said that's true, that China does have a very good relationship with American farmers and hopes to continue to have a good relationship with American farmers, but that at the end of the day, China can always buy from someplace else. He wanted the Trump administration to come to the table and to be able to have discussions, but he said to me right from the start that he felt that, and a lot of Chinese officials felt, that the Trump administration wasn't hearing the Chinese, that the Chinese have been pushing for discussions, but that they feel a bit shut out by the Trump administration and that those discussions aren't really going anywhere. So in the meantime, while the Trump administration hits China with a big package of tariffs, he says that China is going to do exactly the same thing.
Eunice, thanks very much. Won't step down. That's the view coming in from China. Will not yield to external pressure. Meanwhile, U.S. Commerce Secretary Wilbur Ross says that he isn't surprised by China's retaliation to U.S. tariffs. Speaking to CNBC exclusively, Ross said it would have been extremely embarrassing for Beijing if it had not retaliated. He also added that the markets shouldn't be too alarmed. His reasoning is that the tariffs imposed by both countries amount to fractions of 1% of their respective economies. Take a listen.
This $50 billion that they're talking about amounts to about 0.3% of our GDP. So it's hardly a life-threatening activity. Their response to the 232 tariffs was quite proportionate to the 232 amount. The response here is also quite proportionate to the $50 billion that we announced last night. So I'm frankly a little surprised that Wall Street was so surprised by it. This has been telegraphed for days and weeks. The WTO rules do not permit subsidies. They do not permit dumping. They do not permit those things. The rules don't really address very well intellectual property, but it's pretty fundamental that you cannot steal someone's intellectual property. That's what they've been doing. They have to stop doing it. If they got off those two bad behaviors, we're very happy to compete against them, and we're happy to see in which products we're the best and which products they're the best, have a real level playing field.
Well, that's Wilbur Ross there. And to take that conversation further, I'm now joined by Jayant Dasgupta, former ambassador to the World Trade Organization from Delhi. Ina Tangent, political and economic affairs commentator, joins us from Beijing. And Michael Herson, director for China at the Eurasia Group, joins us from New York. Gentlemen, thanks very much for joining us here. Ina, let me start by asking you, we just heard there from the government official speaking to our colleague Eunice in Beijing, saying that China will not step down. It will never yield to external pressure. But is this also a negotiation tactic on both sides now? There is still some time for this to play itself out. What do you believe are they hoping for?
Well, China's tone is polite but firm. And quite frankly, what they're doing is they're matching Trump. They're trying to make him understand that this would be a catastrophe. It's been China all along who's been saying, we need to have talks. The problem in D.C. right now for the Chinese delegation is they keep asking the Trump administration, what do you want? Can you give us a list? And so far, they have not been able to do that. It makes people here wonder exactly what is going on, why he's pushing this. If it's just purely for political gains going in the next election, or whether he's trying to change the conversation in Washington away from some of his domestic ills.
Okay, so you continue to believe that this is more about Trump wanting to change the narrative and take the attention away from the trouble that he's facing domestically. But Michael, let me ask you, China, 106 items, soybeans, smaller commercial planes, SUV, beef, sorghum. I mean, he's hitting the Trump administration where it hurts, wouldn't you say? Because, this is going after the Trump support base. So it's strategic, the items that China has decided to retaliate over.
Oh, that's absolutely right. China is being very strategic about this. The U.S. tariffs are focused on the issues, the industries of concern to the U.S., namely China's industrial policies, and in particular the Made in China 2025 initiative. For China, it's very different. The goal for Beijing is to really narrow the U.S. concerns, to try to land at a spot where Beijing is comfortable with the negotiated settlement. So the way they're doing this is by offering to enter into negotiations and at the same time to raise the political costs on President Trump by targeting goods that are important to his political base, as you said.
Jayant Dasgupta, you're no stranger to trade frictions. Let me ask you, the Chinese finance vice minister saying now it is time for negotiation. But the question is, what will they negotiate over? I mean, President Trump has said that he would like to reduce the trade deficit by $100 billion. The Chinese say that's not doable. That's not even a doable ask. So what will they negotiate over?
There are several issues on which the negotiations are taking place, but to the Chinese mind, I think they're not being taken seriously enough. So this is a kind of muscle flexing exercise which was very much expected from the Chinese. Want serious negotiations to take place, and on a few issues they have already yielded ground. For instance, on financial services, they had a roadmap to open up their market, and they have advanced that date for opening up by about 3-4 months, and in another case by a longer period. So what they want is, the Chinese believe in deals. So if they feel that they can have a negotiated settlement, that would be the best for them. Right. And as far as the U.S. is concerned, also for the U.S. So that is what the Chinese are aiming at, and they are mounting pressure on the U.S. in their own backyard by targeting very strategically industries and sectors which have voted for the president in the past election. For instance, agriculture.
Yeah. Yeah. Inar, will this make things harder now for President Trump? Do you believe the fact that China has gone after SUV, beef, sorghum, cotton, the agriculture belt, so to speak, will this now start to worry the Trump administration? And also, just to take the point forward from Mr. Dasgupta, if both sides are interested or China is interested in doing a deal and a negotiated settlement, what, to your mind, could be the pillars of that negotiated settlement?
Well, in terms of worrying Trump, it's not the Chinese who will be knocking at his door. They're waiting in the conference room. The people who will be there are the farmers and the industries who are most affected by this. Imagine that you're some of the car manufacturers or GE. You sold $220 million worth of $220 billion worth of goods and services in China through your overseas things. That is also threatened. When you start adding it up, and I point to that Deutsche Bank analysis, which showed that actually, if you start adding up everything that China contributes to sends to the U.S., both from China and within the U.S., and then you add up what the U.S. has, sending over 150 million and the 220 million, they're actually only 30 billion apart. So it's not quite the way it seems, and there's plenty of skin on both sides. In terms of how you negotiate this, it's not clear exactly what Donald Trump wants. Throwing around big numbers at 100 billion, right now they're turning down any deal that involves Chinese investment in the U.S. So the Chinese are scratching their head. You want us to get involved, you want us to put investment in, and then you turn around and say no because it's too sensitive. Where would the Chinese invest? This is the question. So right now it's just a guessing game on Beijing's part, and they're looking for the U.S. to be a little bit more certain.
Okay. Michael, we had Wilbur Ross on CNBC a short while ago, and he said, I don't understand why the markets are reacting so negatively. To some extent, yes, perhaps the news of U.S. action and possible retaliatory action from China may have been factored in, but we have seen the markets getting very skittish and nervous given the developments of the day. What do you think seems to now be the fresh concern from a market's perspective?
Well, the concern for the markets is really escalation from here. The measures that the U.S. has announced and China's response, which has been very proportional, is, as Wilbur Ross noted, is not going to be a major concern for either country at the macro level. But the markets are very concerned, and I think have some justification for worrying about the risk of further retaliation from here and an escalation in terms of tit-for-tat disputes. It's also important to note the U.S. is not done yet with the package of measures that come out of this 301 investigation. Tariffs are a very significant part, but there will also be investment restrictions, possibly visa restrictions in the areas of science and technology. So this is really a very sweeping push by the U.S. to push back on China's industrial policies and intellectual property.
What could be next, Jayant Dasgupta? We've already seen that list of 1,300 items that the U.S. has announced, but as Michael was pointing out, we are expecting a further pushback now to come in from the U.S. The theft of intellectual property continues to be an issue that the U.S. is talking about. The Commerce Secretary also alluded to that when he spoke with us, when he spoke with CNBC a short while ago. What could be the next course of action from the U.S. in response to China?
The U.S. would perhaps have to narrow down the list of the items on which they would like the Chinese to make concessions. So the first one, of course, would be intellectual property. The issue of forced technology transfer, which has been alleged by the U.S. The second is about licensing requirements on intellectual property. And the third is investment-related issues. So on all these, they would be looking for concessions from the Chinese. And I'm sure the Chinese also would be prepared to look at legitimate U.S. demands and would be prepared to make concessions because they do have a huge stake in exporting to the U.S. That said, on the 15th of May, perhaps there would be a public hearing, and that could be crucial because there would be several lobbies of the U.S. domestic industry which would speak against the escalation of this tariff war. So that could put pressure on the Trump administration and make it to accept some of the Chinese offers and bring closure to the whole issue.
Okay. Michael, just to take that point forward, as Mr. Dasgupta was pointing out, I think companies have time till the 22nd of May now to object to the proposed tariff hikes that have been announced. What is the reaction from industry that you anticipate?
Well, U.S. industry is very concerned, but they're also very split. On the one hand, I think the business community broadly supports the push that the Trump administration is taking in terms of confronting China on these policies. But it's worried about tariffs. It's worried about the impact that they have for U.S. firms that import goods from China and manufacture in China. And then, of course, they're very worried about Chinese retaliation. So from the standpoint of the U.S. business community, you've already seen voices, and you will continue to see rising voices urging the administration to enter into negotiations with China. Our view at this point is that it seems unlikely that the two sides will reach a settlement before tariffs are imposed. I think they will get there eventually, but the bar is very high for the Trump administration to not impose tariffs at this part. They want to see concrete actions and signs of seriousness from the Chinese side before they agree to concessions. So I think things will continue to be quite uncertain and tense for a period of time, although a negotiated solution does seem as the ultimate destination.
Inar, I'll end by asking you what you expect could be the next trigger in this potential war.
Well, quite frankly, this attitude that somehow that China will be just offering concessions, I think is wrong. If you start looking at the wording of what they've been saying, they're very, very clear. And it is the most unambiguous statement that they will not budge on this issue. In terms of what's going forward, I do agree that the tariffs will be put in place. I don't expect this administration to make much progress in terms of defining what it wants. It's woefully underprepared. It's about to take on a major initiative with the DPRK. It's fighting with all three of its top trade partners, Canada, Mexico, and China. I just don't see this ending very well, and it's shaking confidence in the U.S. as a reliable player. This could have far-reaching consequences in terms of destroying the dollar trade hegemony, which has been in place since World War II. This is playing with fire, and I don't agree with this idea that this is some sort of intellectual game or something like that. All the major trade groups have said definitively they are not in favor of this strategy. The question is, will Donald Trump listen?
Well, we'll have to wait for a tweet to find out, won't we? But Inar, Michael, and Mr. Dasgupta, appreciate you joining us here on CNBC TV18 to take us through the implications of the latest developments in the battle between the US and China over trade. We'll take a break. When we return, there's lots more to talk about. Back in a moment.